What's up, guys? So in today's video we're talking more about Tesla. So this is the video for the recap of Friday's session. Tesla was up around 5% today. Now a lot of these gains were probably due to the overall market being up big. There was a lot of other stocks that I owned that were up as well. And one of the things about Tesla is, guys, I said that even though there were some kind of short-term issues with basically being those factory closures, it looks like that we are still on a pretty nice uptrend. So as you can see here, just over the last month, we've been uptrending. And most of these stocks have recovered in the market from those huge sell-offs back in mid-March. But the important thing here is for Tesla that the Tesla is approaching $900. So guys, a lot of those factories, hopefully, I just read a report saying that the Fremont, California factory is going to open again very soon, or if it's actually already open, and they're already having to play catch up. So this quarter started on April 1st, and we're basically halfway through it, so we can see if they can continue to produce some cars. And a lot of people have probably started going back to work now with kind of things opening up a bit around the world. So hopefully a lot of those people that pre-ordered cars don't cancel their orders. So where is Tesla stock headed? Well, as you can see here, guys, it looks like we're clearly headed to $900. And even though when Elon Musk tweeted himself the stock was too expensive, the stock basically rebounded very quickly and broke through a bit of resistance here. So as I was telling you guys, I want to show you this part of the graph. This was kind of a point where I said this was a slow uptrend point, and that you could sell off here because there was a bit of risk. But that's why a lot of times, guys, I recommend using stop loss orders. So instead of just selling the stock here, you could have put the stop down here at 680, and that way you would have held on to your position. So now we're in 800 again, and guys, everything's looking pretty good now. The company's been profitable for a while, so now it's just whether we're going to $900 or even $1,000. So it sounds pretty crazy, right, that Tesla stock will be trading at, $1,000 a share. But, based on the way things are going, this looks highly, highly possible within the next 6 months to a year. So basically what's going on with this stock now is that, for you guys to continue to hold on, congratulations. I've been holding my shares as well. There's a couple of ways that I know some of you guys are playing the stock, but I wanted to kind of go over my strategy, what I'm doing with Tesla. So for me, I'm not really trying to guess where the stock price is going to go day to day. What I'm looking for is I'm basically looking for to get as many shares as possible. So now this has become a lot harder because the stock price has run up a bit, and it's not necessarily too expensive, but it's on the higher side considering that about a month or 2 months ago the stock was $350. So it really does matter what price you do buy stock at, because obviously the more you pay for a share, it's going to affect your overall returns. And we're looking here to get as many returns as possible. So I remember there was a comment a few videos ago where someone asked how they should be playing this stock. Well, there's a couple of ways you can play this. I know a lot of you guys are trading it. Some of you are shorting Tesla stock, which seems to me very, very risky, and others of you are just trying to make money. So I'll give you guys pretty much a basic strategy on where I think it's a good idea to play Tesla. So as you can see here, we basically on this chart, we have an example of what we would call a 52-week low, which would be the lowest stock price that a stock is trading over an annual period. So for Tesla, it would be around, let's say, $320, $350 range. And then the 52-week high. So the 52-week high would be the highest price that the stock is being traded at, around $950. So guys, you have these two ranges on this stock. So what does this mean? Well, this means that if you want to buy as many shares as possible, the closer a stock like Tesla gets to its 52-week low. Now, I'm talking about stocks like Tesla. I'm not talking about garbage junk stocks that don't make good products that people enjoy. At the end of the day, companies are going to do well if they produce products and services for their customers that their customers love and enjoy. So I'm not talking about just any stock at a 52-week low. I'm talking about companies like Apple, Tesla, Amazon, right? Things like this, Netflix, good stocks that people care about, companies that customers love. If this is like a struggling company out there, or this strategy doesn't work. So what you can do is you can simply you can set this up with your broker, or if you guys use Robinhood, you want to create a watch list, right? So what you want to do is you want to basically be watching this stock, and any time that this stock comes near its 52-week low, you want to buy as many shares as possible, right? When the stock approaches its 52-week high, you want to be selling. Now, I know this sounds simple, but it seems like a lot of people do the opposite. It seems like they want to buy as the stock goes up, and then when the stock starts dropping, they're like wanting to sell or something like that. So that's the opposite strategy you want to do, guys. And the reason why this strategy works is because simply you're going to still own the stock, but you're just basically allowed to get more shares. So if, let's say, you bought the stock at dollars, right? If the stock goes near 1,000, you sell, you've basically doubled your money. So that means if the stock does come back down to around 500 levels, now you have twice as much money. So now it's, let's say you had 50 shares, and then you sold your 50 shares near the top. Well, then now when the stock comes back down to that similar price level that you bought in previously, now you can get 100 shares. So that's kind of the basic strategy that I would say you guys use. Don't be afraid to take some of your profits off the table, but make sure you're selling near the high. And once again, I want to give a disclosure. This only works with quality companies. So if this is a stock that's been going down like Ford for years, it won't work because it's never going to a 52-week high because the stock is tanking. But with a stock like Tesla, you can do that, simply buying near the 52-week low, selling near the 52-week high, because obviously the stock is not going to go straight to $2,000. There's going to be ebbs and flows, and in that Q2 report, probably going to send the stock price down. So that's, guys, how I would recommend trading Tesla. So I hope you enjoyed this video. Please give me a thumbs up, and remember, I post videos on Tesla every weekday, Monday through Friday, guys. So I'll see you guys in the next video on Monday. Until next time, guys, take care.